Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, you'd think that hitting the 50,000 mark on the all-share index would be manna to most people's ears, but in fact, the trading out there has been very, very difficult at the moment, hasn't it?
Yeah, it has. I've been finding it very, very difficult to try and navigate this market lately. I think, on the one hand, we all think it's overbought and it's probably due a bit of a pullback. This time of the year seasonally is typically when you do see a bit of a pullback in the market normally. But yet it just continues to grind higher gradually, and it's very tight, narrow ranging trading days that we're seeing. Very little volatility to speak of. And that does make trading conditions difficult. As traders, we want volatility. We want we want movement in the market. So not having had any movement recently has made it very, very difficult. And I'm certainly feeling that. I'm finding it tough to navigate this market at the moment.
Well, having said that, before we went on air, we were laughing about how this time of year normally you're in a bit of a slump. So maybe it's also seasonal, and this is something to just be prepared for and weather through.
I think that's right. I actually keep a trading diary, and I write all my trades down and how I'm feeling at different times of the year, whatever, all sorts of random thoughts that come up in my head. And I was looking back last year and at the year before, and it's quite interesting. Every year this time, I've sort of made notes that I'm sort of markets
short
dull.
four-letter expletive, possibly.
Yeah, the sort of stuff we can't really repeat on this show. But yeah, just explaining, how frustrating it is. But it's seasonal. It comes and goes. We'll probably find this market's likely to be a bit tricky for a while still. Hopefully, towards the end of the year, it'll ease up a bit, and we'll find some nice opportunities.
Yeah, and I know that you want to spring a cricket analogy on me right now.
Oh yes,
you've been saving it.
I do. Yes, you know that every now and again I compare trading to cricket.
Yes.
And I find quite often there's sort of nice metaphors that you can put together. And I just find at the moment this market feels like you're facing Dale Steyn on a good day. He's putting it right there in the block hole. You can't play a shot. As much as you want to. He's trying to force you to play a shot, but you can't. And that's how the market is at the moment. I just find that for the most part, the best thing is actually just to sit tight and wait, see the over through and wait for the bad bowler to come on and hopefully bowl you a loose ball here and there. But don't try and force anything in this market. It's very difficult at the moment. And if, I suppose accept the fact that your runs might come from quick singles here and there. The scoreboard's not going to be ticking over at a rapid rate in this current market climate.
Okay, easy, Tiger. That's enough of the cricket analogies. Garth, on that note, last week's trade was New Gold Platinum, the ETF. And I suppose looking at that chart, not much really has happened since you entered the trade.
No, it hasn't. It's really done very little. So this is the chart of that New Plat ETF. Just for those that didn't see it last week, what this ETF is it's a representation of the rand price of platinum, and every one share of this ETF effectively denotes 1/100th of an ounce of platinum. Yeah. But priced in rands, okay. So what I'd seen here was that we've got this falling wedge structure, and that the price had broken out through the top of that falling wedge, which is a bullish setup. Also, this is also talking to the whole situation in the platinum belt with the strikes and stockpiles dwindling, and at some point I would expect the platinum price to probably respond, although we haven't seen.
In fact, wasn't it Thursday last week or thereabouts?
Slightly, but you'll see. We'll have a look at the dollar price of platinum after this, and it's at a very critical level where we could start to see some action fairly soon. I'm looking here at the fact that there's this big overhead resistance on this New Gold Platinum ETF at 161 Rand. And my thinking was actually for a move to go back up to that 161 Rand and possibly beyond that if we see a breakout through that level. So what I did last week was I went long of 800 CFDs at 152 Rand 60. My stop loss is at 147 Rand, and I'm looking for a target here of 161 Rand. So it's fine. I mean, it's really the trades fine, it's working, but it's not really shooting the lights out for us. It's been very, very lethargic over the last week. We're more or less at the same level as where we entered the trade. So we just sit tight with it. I mean, there's no reason to cut this trade at the moment. I think we just need to be patient and see if it'll work for us.
Yeah. Well, on that note, if you want to bring up the dollar platinum price,
yes,
you know, what do you think is possible at this point?
Well, here's the dollar price of platinum, and this goes back looking over the last sort of 9 months or so. And what's quite interesting is this big overhead resistance area at $1,485 an ounce. And you can see the market bumping up against there. You can also see a pattern of rising lows here. And a pattern of rising lows typically indicates that the buyers are fairly active at the lower levels. And when this thing resolves itself, it does open the likelihood that we will probably see a break to the upside. And I think if we start to see a breakout through that resistance, that could actually be quite a powerful break. And you might find that it just suddenly happens with the realization that stockpiles in the platinum sector have run significantly low, and that suddenly demand is outstripping supply, or something like that. I mean, I'm kind of talking my book, I guess, but that to me is what looks like is very, very possible here. If you tie those fundamentals together, what we're seeing in the platinum sector at the moment, you tie it back to these technicals that I'm looking at here, it does talk to the possibility that we could see a fairly powerful break to the upside here, I think.
Yeah, I mean, also, I don't know if people are taking into account that even after a very long stoppage like this, the mines are going to take a long time to get back into full production. I mean, it could be up as much as 3 months in some cases. So maybe that's not been factored in. I don't know. You know, it is very frustrating to see the platinum price not having gone anywhere during this period. But there you go.
You would expect it to have responded more favorably so far, but you know, maybe it's still coming.
Okay, guys, so that sort of sketches the context of the most recent trade that you've done. But you're looking, or you have in fact put another trade onto the portfolio, and that's Aspen.
Yes, I'm looking at Aspen now as this week's trade. And I know this is a stock that we've traded successfully for the most part over the last couple of years. Once or twice it's bitten us, but for the most part you can see that that stock is very, very undoubtedly a trending stock. Over the last, we're going back to 2011 there, so we're talking back about 4 years. You can see this steady upward trend, and every time this price has pulled back to the uptrend, you can see that it's found support and it's moved higher. Now, what we've seen over the last 3 months or so is that the price has actually been moving sideways, and this is what I refer to as a correction in time rather than a correction in price. So a correction in price is like you see, you know, over here, for example, where the price rallies, but then it falls back and it finds support at the trend line. What we've had here is where the stock has basically tracked along sideways for 3 months, and now it's getting to the point where it's meeting that upward trend again. It's allowed the stochastic oscillator to get fairly oversold, which is an interesting development. So what I want to do now is basically zoom in on that more recent area of trade, basically the trade that we've seen during 2014, and unpack that a little bit more and have a look at the trade that we've entered for the portfolio. So here we go. There you can see that primary upward trend that I'd highlighted on the previous chart. It comes in at around about 270 Rand, 272, that sort of area. Also, what's quite interesting is that we've had this, you know, it's sideways to slightly downwards, almost like a broadening pattern, consolidation since March. So for basically 3 months, we've been going pretty much nowhere with this stock.
And bear in mind, this is while the market has been hitting new highs, although, as you say, grinding up to new highs rather than kind of leaping there. Yeah,
that's it. Also, we've got this range sort of area at the moment where we've got 273 Rand. There's a whole bunch of bottoms down there at 273 Rand. And then at the top of this pattern is 280 Rand. So right now, we're sort of stuck in this range between 273 and 280. Also, what I would do is if we see a break through 280, then I would see the possibility that we take the height of this broadening structure and then project that distance up to give us a target. And it opens up, you know, north of 300 Rand as a possible target if we see that breakout. So, and then the last thing is that we've got the stochastic oscillator, which is turning up from oversold levels, which is quite interesting. So what I've done is I've actually gone in just with a half position for now. And the reason I've gone in with only a half position is I just want to leave myself a bit of room to buy more if the price does pull back a bit more towards that trend line, that rising trend line, or alternatively if we see a breakout through 280 Rand. One of the two, whatever the first is to happen, then I'll add the other half to this trade. But for now, remember what I said about facing Dale Steyn and wanting to just hit quick singles? This is very much what I'm doing here. It's a small trade. I'm really not going big in this thing at all for now. and I'm leaving myself with a little bit of room to add to it if I need to. So I've gone in, I've bought a half position at 277 Rand. My stop loss is 269 Rand.
Oh, in greater detail then, I mean, you talk about a small position, and we'll get to what percentage of the portfolio. Well,
all right, so I'm buying it at 277, as I said. Stop loss is 269. The risk per share, therefore, is 8 Rand per share. I'm risking only 1% of our account here, and that talks to the fact that I'm taking a small position. Remember, we'll usually take 2% of our capital as a risk, but we're only doing 1% here, so that's 3,000 Rand that I'm willing to risk. I take that capital risk and I divide it by the risk per share, and that gives me 375 shares that I can buy. So 375 CFDs is what I've done for our portfolio. The target, I'm looking for 300 Rand here as a minimum target, and then my risk to reward ratio is therefore 1 to 2.87.
Garth, given that there has been a fairly steady consolidation of Aspen, do you think it might be a while before you would hit that target? I mean, are you prepared to give it a bit of time? Or might it show what it has done in the past, quite often sort of a big jump up, and then kind of start consolidating or leveling off?
Yeah, this stock has a habit of doing this, where it goes sideways for a lengthy period of time, or sort of nowhere for a while, and then suddenly it just pops. So I think if we do get a breakout through 280 Rand, it probably could be quite a quick move that we'd then see up towards 300 Rand. But look, let's see how it plays out if and when that happens.
Yeah. So what does the portfolio look like then, given that there hasn't been too much activity?
Yeah, well, it's very lethargic lately, actually. I mean, we're still sitting more or less the same as last week. Just over 298,000 Rand. So we're up 19% for the year to date. Still a good performance, but things have sort of gone a little bit quiet over the last few weeks. We had a really strong performance moving up into March, but since April, we've really been quite sort of lethargic with this portfolio.
And Garth, do you get the sense, just talking about the fact that you have that option for the June 40, the June closeout for the top 40, and then the September option, which are both effectively calls, or rather punts on the market dropping back from this level. Do you get the sense that there are a lot of other traders out there just waiting for sort of the turn, and then they'll start, for their shorts to sort of kick into gear?
I think there's a lot of traders that are already short, and they're suffering and they're burning, and that's why the market keeps moving higher. As those shorts are forced to cover, it kind of pushes the market higher. And what often happens is the market will eventually only fall once the last bear has been chased out of town, kind of thing. And that's why I like to put my short positions on via an option structure like this. So I don't run the risk of being caught in a short squeeze. I can stay with the position, and when the market falls, if it falls, I'll be involved. But if it doesn't, it's not going to keep me awake at night. Yeah.
Okay, so just to end off then, courses. I know you've got one coming up. It's a face-to-face session. Just remind us what those are about, because they're slightly different from your high probability courses.
Yes. Okay, well, yeah, we've got the various trading courses in the different regions, Joburg, Cape Town, Durban, and Port Elizabeth, coming up during June. So if you'd like to attend any of those, I'm running a CFD course on a Thursday night, and then a high probability trading course on a Friday. Anybody that's interested in that, please email me, and I'll send you the details. Then this week, Thursday, the 29th of May, I'm running a face-to-face session. And these are these live interactive sessions where myself and my colleague Andrew Todd present on a topic that's quite interesting, topical in the market right now. And then we open the floor to an hour of questions and answers where we do live analysis in the event.
And what's the topic this week?
The topic, Andrew's going to be talking about Elliott wave principles.
Okay.
And I'm going to be talking about strategies for trading in a choppy market that we're expecting between sort of now and August, potentially. What sort of strategies you can look to employ to trade that kind of market. So if anybody's interested in attending any of these, either the courses, or if you'd like to come to this face-to-face session this week, Thursday, please email me, garth@traderscorner.co.za, and then I'll send you all the details.
Okay, great. Garth, we have to leave it there. Thanks as always for joining us, and we'll chat to you next week. That is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.